So one of the biggest banks in the world has just dropped a super bullish forecast for 2026. But, and this is a big but, their prediction puts them on a collision course with maybe the most powerful financial institution on the planet, the US Federal Reserve. Today, we're going to break down exactly what this clash means for the economy and, yeah, for your money. And let's just dive right in with the headline. Bank of America's global research team just put out their 2026 outlook, and the head of research, Candace Browning, is making it crystal clear. Despite all the uncertainty out there, they are betting big on both the economy and the AI revolution. So here's how we're going to tackle this. First, we'll unpack that bullish outlook. Then, we'll get into the Federal Reserve's absolutely critical role here and how you can actually decode their signals. After that, we'll see how the expert forecast stacks up against what the market is betting with real money. And finally, we'll tie it all together. All right, first up, the bullish outlook. Let's take a peek inside Bank of America's crystal ball and see exactly why they're feeling so optimistic about 2026. Okay, so their whole forecast is really built on three big ideas. First, they're calling for stronger than expected GDP growth in both the US and China. Second, they think the AI boom is the real deal, not some bubble that's about to pop. Well, not yet anyway. But here's the twist, right? Despite all this good news, they're only predicting pretty quiet 4 to 5% growth for the S&P 500. Kind of strange. So you've got to be asking, how can they be so hot on the economy but so lukewarm on stocks? Well, the answer, the key that really unlocks this entire forecast, it all comes down to this one number. Bank of America predicts the Federal Reserve is going to cut interest rates exactly twice in 2026. And that slow, careful pace, well, that changes everything. And that brings us right to Section 2, the Fed's delicate balance. See, to really get Bank of America's prediction, you have to understand the ultimate influencer in this whole game, the U.S. Federal Reserve. They're the pilots of the U.S. economy, and their caution is the whole reason BofA's stock market forecast is so muted. Now, their main tool is something called monetary policy. I know it sounds super complicated, but it's really just about the actions the Fed takes to control how much it costs to borrow money. By making money cheaper or more expensive, they can literally hit the gas or the brakes on the entire economy. And they do all this while juggling two main goals, what's called their dual mandate. Goal number one, keep prices stable, which means keeping inflation under control. Goal number two, promote maximum employment, which means keeping the job market humming. The tricky part? These two goals are often fighting each other. It's a constant tightrope walk. Okay, so if the Fed is on this constant tightrope, that brings us to the billion-dollar question in Section 3, cracking the Fed's code. I mean, how on earth are we supposed to figure out what they're going to do next? You know, it can feel like you're trying to read tea leaves or something. But thankfully, the Fed actually wants us to have a good idea of what they're thinking. They give us clues through something called forward guidance, and it comes in a couple of really important forms. And this is where it gets really interesting. On one hand, you have what's called Delphic guidance. That's just a forecast, the Fed saying, here's what we think might happen. But Odyssean guidance? That's a straight-up promise. It's named after Odysseus from the myth, who literally tied himself to the mast of his ship so he wouldn't be tempted by the siren's song. It's the Fed binding its own hands to prove they're serious. The other huge tool is the famous dot plot. This is a chart they put out 4 times a year, and each dot on it represents where one of the Fed policymakers secretly thinks interest rates are heading. You should really think of it as their shared but anonymous flight plan for the economy. Super useful stuff. Okay, so now that we know how to read the signals, we get to do the fun part in Section 4, the market places its bets. We can actually compare Bank of America's expert forecast with what thousands and thousands of traders are betting with real money. Right now, it's the experts versus the crowd. So let's circle back to that all-important number. Remember, Bank of America is planting its flag firmly on the idea of exactly 2 rate cuts from the Fed by the end of July 2026. That is their line in the sand. And this chart just illustrates the tension perfectly. If you look at the real-time data from the market, traders are giving that exact scenario, 2 cuts, about a 34% chance of happening. But look at the bar right next to it. The market is pricing in a 26% chance that the Fed will be even more aggressive and deliver 3, maybe even more cuts. The crowd is just way hungrier for lower rates than the experts are. Okay, so let's bring it all home in our final section, what it all means. We're going to take the bullish forecast, the power of the Fed, the market's bets, and just synthesize all these signals into one clear picture. So this table really breaks it all down, right? On Fed cuts, BofA says 2 on the dot. The market thinks there's a good chance of 3 or more. On growth, BofA is optimistic, but the market is even more eager for that boost from lower rates. And for stocks, BofA sees muted returns, but what the market actually does will totally depend on which path the Fed takes. So the key things you're going to want to watch are the official inflation data, that's the PCE data, plus how much is being invested in AI and whether businesses start spending big on new projects, which we call CAPEX. And this, right here, this is really the key takeaway from all of this. It's the gap, this difference between an expert's careful, calculated optimism and the market's sheer hunger for faster, deeper rate cuts. That disagreement is the central tension that's going to define the economic story of 2026. So at the end of the day, it leaves us with one massive question. We've got an optimistic forecast from the experts, and we have an even more eager market betting on something better. But with AI lurking in the background as the ultimate wildcard, whose script is the economy actually going to follow in 2026?